Yesterday, I published a video on the oil war, but now things have changed drastically because of the new conflict in the Middle East causing oil prices to spike. So in this video, I want to give you an update on the oil war, not from a political perspective or a geopolitical perspective, but from a financial perspective, because all of these things will impact your wallet. And if you haven't seen the original video, I will also link it for you down in the description. But let me start with the background. OPEC, which is countries like Saudi Arabia and Russia, have been kind of in an oil war with the United States because they've been working to push the United States shale companies out of business. How do they do that? By pumping up more oil, causing oil prices to fall, making it not profitable for these United States shale companies to keep producing more oil. Well, things just took a turn with the new conflict in the Middle East because now oil prices have spiked. And the reason oil prices have spiked is because investors are worried that if there's more conflict in the Middle East, supply of oil is going to get messed up and oil prices are going to go up even more. So we saw a huge surge in the buying of oil as soon as we saw the attacks on Iran. And this is where you need to understand how the financial game is also a part of the geopolitical game. Now, what do I mean by that? There's a lot of things happening in the world. There's conflict in the world. I don't really care which side of the coin you're on. I want you to understand what this means from a financial perspective, because when there's conflict that has to do with oil, you need to remember that the price of oil depends on supply and demand. Now, as of today, there's really no major change in the demand for oil globally. When the pandemic hit, people weren't going to work, everybody was locked up in their homes, and the demand for oil fell. Right now, the demand for oil is there, kind of like normal. So we know the demand is stable. The supply of oil is what fluctuates. Recently, over the last number of years, we have seen the supply of oil rise, especially because OPEC, remember Saudi Arabia and Russia, have been working to increase the oil production to push down the price of oil. Why do they do that? They know that in the United States, U.S. shale companies like to see oil at $65 to $70 a barrel in order to break even. Well, as of, let's call it a couple of weeks ago, oil prices were under $60 a barrel, which meant that in the United States, these U.S. shale companies were producing oil and losing money for every barrel of oil that they produced. And this was by design because OPEC wanted to essentially push some of these shale companies, United States shale companies, out of business. And we were seeing layoffs in US shale companies. We were seeing them slow down production. But now, with this most recent change in the Middle East, what have we seen happen? We saw oil prices immediately spike because now investors are saying, if there is more conflict in the Middle East, which is a big producer of oil, that could create supply disruptions. These supply disruptions could lower the supply of oil, causing the prices of oil to go up even more. And that's why investors said, maybe we should buy oil. And we saw prices of oil overnight jump up above $70 a barrel. Now, this is where I want to go over what certain banks are saying about this. That way you understand all perspectives. But I want to remind you that we covered all of this in Market Briefs. Again, Market Briefs is my free financial newsletter for investors, where every day my team is working to break down what's happening in things like the economy, housing, stocks, crypto, and global markets into a fun, witty, and easy to read newsletter. It's read by hundreds of thousands of investors every morning. Plus, when you join Market Briefs, you'll also get my investing masterclass as a bonus, where I will show you how you can start investing and how you can find investment opportunities before everybody else. So if you want to get Market Briefs and the investing masterclass all for free, all you have to do is click the link down in the description below. Now, going back to what's going on, let me highlight what Reuters had to say about this. Quote, Israel's attack on Iran is unlikely to cause a major disruption to oil supply. However, if there is a disruption to the supply chain, then oil could jump up to above $100 a barrel. And then JP Morgan also chimed in, saying that if things do get worse in the Middle East, we could see oil prices go up to $120 a barrel. Now, if you feel a little bit uneasy understanding that investors are going to profit off of this idea of conflict in the Middle East, I completely get it. I want you to understand how this works. That way you can understand the game. Again, my goal is not to tell you what your moral obligations should be. You have your own moral compass. I want you to understand the game. I want you to understand what's happening. That way you can be a smarter investor. So investors are looking at this saying, if things get bad in the Middle East, oil prices will go higher. And because of that, investors started buying up the price of oil. Again, we don't know what's going to happen. Maybe things will calm down. Maybe there will not be a supply disruption. Maybe things will get worse and oil production and supply will get messed up. We don't know. People are predicting, people are guessing, and at the end of the day, we don't know what's going to happen. But on the flip side, the reason why you need to understand this is because in the United States, you will be impacted by oil prices, whether they're high or whether they're low, even if you are not an investor. Why? Because oil prices can influence things like gas prices. Oil prices can influence things like food prices, grocery prices. Oil prices can influence things like the prices for airline tickets or travel. Fuel and oil is the backbone for many different products, not just gasoline. Because when you want to buy your avocados at Walmart, well, avocados have to get to the Walmart store, which means somebody's got to drive them from the warehouse to the store, and they have to be driven from the farm to the warehouse. Well, that transportation needs energy, oil, gas. So when oil prices go up, it can impact the prices of many different things. And recently, we've been benefiting from lower gas prices. Now, of course, we're not at $1 gas or $2 gas, but lower gas prices than where we were a little while ago. Could this make gas prices go up? Sure. Again, we don't know what's going to happen, but this is where it is helpful to pay attention to what's happening with oil prices and how things impact oil prices. That way you can be a smarter investor. And now it also impacts oil companies. And this is going to also seem a little bit strange, but understand this. Remember what I said before. In the United States shale companies need to see oil at $65 to $70 a barrel in order to break even. Which means when oil was at $60 a barrel, they were losing money every time they produced a barrel of oil. Well, now, because of what's happening in the Middle East, oil prices spiked, which means those same oil companies in the United States that were losing money are now able to sell their oil for a profit because of the conflict in the Middle East. Strange, I know. I want you to understand how this works. And this is where I want you to make smarter decisions with your money, because you want to make sure that you can take care of yourself, your family, and your community. Now, I'm not saying you need to invest in oil or anything like that, but this is where I want you to understand how money works. Because at the end of the day, the way you build wealth is by investing your money. And I'm not talking about where you need to invest. I'm talking about just general finance 101. The way you build wealth is by investing your money. Now, there's two ways that you can be an investor. You can be what I call a passive investor, where you do what I call ABB, always be buying into broad financial indexes, the S&P 500, the Dow Jones, the total stock market. You, every week, every 2 weeks, every month, you just keep buying these funds and you don't even think about it. And that is one strategy to build wealth. The other is what I call active investing. Active investing is where you look for a shift. You're looking for a change in spending. You're looking for a change in the economy, which could create an investment opportunity. This is a lot of what Wall Street is doing. They're looking for where is there a change in spending habits. Now, for most people, I don't recommend active investing. I recommend being a passive investor. And I should also say that I can't tell you what to do because, well, I'm not a financial advisor. I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But I don't think most people should be an active investor, but it is right for some people. Now, when you do this type of active investing, you have to understand how money works, how money moves, and how different decisions can influence how money moves. Because at the end of the day, when you understand how things like an attack in the Middle East can impact certain companies, certain stocks, for example, how it can impact oil, how defense companies that produce military products could benefit when there's conflict, you want to understand this. Again, I know morally it might feel really weird. I 100% get that. When I first started learning this, it made me feel very off as well. I want you to understand this. That way you can start thinking about your finances and investing in a way that aligns with your morals, but you understand how money flows. This is just one extreme example. And this is where, again, if you want to be an active investor, you want to stay up to date on things that are moving money. Not necessarily with wars or geopolitical conflicts, but in general with things that move money. And those are the things that you want to pay attention to. Now, yes, you can always do that research yourself, and I encourage you to try doing that research yourself because that's going to help you learn the processes. But if you ever do want help, my team at Briefs Pro also publishes a weekly newsletter to help you stay up to date on these types of shifts. If that is something that you're interested in after you join Market Briefs for free, you can see if you'd like to subscribe to Briefs Pro. There is a cost to join Briefs Pro because, well, there's a very heavy cost for us to produce this research. But if that is something that you're interested in, I would also recommend that you check out Briefs Pro. Now, there's a lot of changes happening to the oil war. There's a lot of changes happening in the economy. So we will be keeping you posted on Market Briefs, and I'll be doing my best to keep you posted here on my YouTube channel as well. And with that, have a nice weekend. I will see you on YouTube on Monday.